Let's try and figure out from our experts whether this is just expiry-led adjustment. Remember, next week is a truncated one with Monday being a trading holiday for us here in India. So, the trend has completely reversed for the market, and is this bounce likely to sustain or not? Kunal, Naresh here with us. We've also got Dipan Mehta joining in on the show right now. Naresh, hi, afternoon. Let me come to you first. What is it that you're making of the Nifty texture today?
So the last 2 days to end the financial year, and we've seen a recovery all the way to 23,800, which was the previous swing high. And now we may start making a higher base. 23,300, 400 now becomes a support. 23,800 to 24,000 is the resistance. We've seen 24,000 is the 200 DMA, 23,800 is the previous swing high. So overall, time for some range bound move for the next at least 2-3 sessions.
Bound move is what we should expect at least for the next 2 to 3 sessions. In fact, the flash on the bottom of your screen, you have the 10-year benchmark bond yield also that's fallen to the lowest level since January 2022. Remember, later today you will have the outcome of the borrowing calendar meet that is going to be taking place between the RBI officials as well as government. So watch out for that. Bond yield definitely right now. January 21st, 2022 low is where it has hit at this point in time. But let's talk about the Nifty rejig, because it's that time of the month again. All eyes are set on the March Nifty rejig. You have Zomato, which is now known as Eternal, as well as Jio Financial. They're poised for inclusion. So let's go across to Sharad to understand what kind of inflows the street is actually watching out for with regards to that.
Good afternoon. Firstly, tomorrow will be a very action-packed day. There, of course, there's a Nifty index rejig, but also the expiry would be there. So, of course, there will be volatility, especially in the last half an hour of trade tomorrow. But as per the note by Nuvama Alternative and Quantitative Research, the Nifty 50 changes, Zomato comes in, BPCL goes out, and for Zomato, there's an inflow expectation of $602 million, while there's an outflow expectation for BPCL coming in at roughly $225 million. Also, Jio Financial Services will be included in the benchmark indices of Nifty and expecting a $308 million inflow, while Britannia will be going out and a $238 million of outflows is expected. Also, apart from the Nifty 50 index changes, there is also Nifty Bank where the weights are being adjusted, and over here Federal Bank would be in focus. They're expecting a net flow of roughly $17 million, while the key outflows is expected for Kotak Bank coming in at roughly $67 million. Also, the CPSC, the public sector index, which is tracked by NSC, over here Power Grid is expected to have a net inflow of roughly $54 million because of adjustments, while outflow for NTPC is expected to the tune of $66 million. Now, also apart from this, there is an important analysis which has taken place on how expensive the Nifty would be before and after the changes happening in the rejig. Now, of course, the before numbers, if you look at it for EPS, it stands at roughly 1186 for FY26, and FY27 is 1349. Post the inclusion of Jio Financial and Zomato, this EPS expected to come down 1171 and 1335. That's the expectation for FY27. Also, on the other hand, if you look at how the richness is being panned out, the P ratio we have taken before this inclusion, the ratio is just below 20, and for FY27 it's below 18. But after the inclusion, Nifty will turn expensive. The valuations coming in at almost 20.2 times for FY26, and for FY27 coming in at 17.7 times. So, of course, Nifty will turn expensive after the rejig, and also the EPS will be coming down, as of course both the companies, if you look at the profile itself, they are not very large profit making companies. So that's one cause of concern. But overall, this is the new composition taking place where new age companies are coming in the Nifty composition.
Okay, that's that on index rejig and what's likely to happen and the kind of outflows and inflows that it would incur. But let's welcome on board Dipan Mehta and find out what he's making of the market right now. Dipan, hi, afternoon. Good to have you on the show. We've bounced up almost about 8% from those recent lows for the index alone, and a bigger rebound for the mid and the small cap indexes. You think we've bottomed out for good?
Yeah, good afternoon, and thank you for having me on your show. I think certainly we have a strong bottom in place at this point of time. Whether it's a durable one, only time will tell. But predicting tops and bottoms is difficult. But if we can get a trading pattern, or rather, I would say a price pattern of the Nifty, whereby we have higher tops and higher lows, then that will give us more conviction that the worst is over for the time being, and that this particular market has entered a new bull phase. Also, the upcoming earnings will be very important. for kind of sustaining this rally which we have seen in stocks. But nonetheless, I think I would say that we have a strong bottom in place, which will be difficult to pierce on the way down unless there is some significant bad news.
Good afternoon, Dipan. Shall also joining the conversation. Like you said, the earnings will be very important, very crucial one. But a lot of brokerages or a lot of views have already been penciled in that it is likely to be a weak quarter going ahead. But when do you foresee that there could be a bounce back, especially when you talk about earnings and especially for those that were beaten down in the previous quarter, like the FMCG names?
First of all, I don't agree that March quarter will not be as good because typically Jan, Feb, March is great for many industries, especially capital goods, engineering, construction. So that should sustain earnings. Also, oil marketing companies, refining companies should have it good because of cyclical factors. And on the whole, I don't think that it's going to be such a bad quarter. But expectations may be running a bit on the higher side. So you may have disappointment on that count. And also from March quarter onwards, you'll see the lot of benefit of the base effect coming in. So that's also something to consider. But predicting an earnings season is extremely tricky, and you may have a very patchy earnings season as well. But management commentary is important, and if generally I think the indication is positive, then I think markets and players will grab onto those positive statements, and you may see a further improvement in sentiment. But we are a few weeks away from that. But I do feel quite hopeful of the upcoming earnings season.
Of the earnings season. So Dipan, on that note, tell us where is it that you think the big swing is going to come in this earnings season? Any sectors?
I think that banks and NBFCs may report a good set of earnings. And the reason for that is that volumes have picked up, liquidity has improved, some pressure on net interest margins may have subsided, and there would be a flattening out of the NPA provisions purely on account of base effect. And a lot of provisioning has been done in the earlier quarters as well. So from that point of view, banks and NBFCs are the first sector that we'd be looking at in terms of outperformance and in terms of better deliverables in the March quarter. Apart from that, as I said, capital goods manufacturing companies across the board, whether it's L&T, ITD Cementation, Afcons Engineering, I think all of these companies typically see a lot of boost in their order inflow as well as revenues for the March quarter, and some more operating leverage also comes to play over there. So we may expect good numbers coming through from these companies, as also some of the other capital goods manufacturing companies, could be solar equipment companies, could be wind power companies. So I think that that's one segment which looks quite positive. And we have seen a mild improvement in urban consumption. It's visible on the street. It's visible in terms of whatever statements have come through. So retail companies, travel companies, hospitality, I think all of these companies also may report decent numbers, maybe not blowout numbers, but at least the stagnation which we had seen the last few quarters or so, that may see an improvement over there. So broadly, these are the three we are quite positive on. And cement also, I think, because of base effect, because of a better industry trends, maybe not in terms of the earnings, but definitely I do hope the cement industry managements are more optimistic now than they are ever in the past 4-5 quarters.
All right, so those are some of the sectors that one can watch out for pretty closely. Dipan giving the rationale as well on that particular front. But right now, let's slip into a break on this edition of Closing Trades. When we come back, we will be charting the market direction given the fact that we're slipping towards the day's lowest point. Welcome back. You're watching Closing Trades right here on ET Now. And if you look at the markets, yes, we've drifted lower towards the day's lowest point when you talk about the benchmark indices. Nifty Bank underperforming the benchmarks. Along with that, broader markets also are not in great shape. Kunal, what's your take actually coming in, and what should be actually built in for the markets given the fact that, yes, there's expiry also that will weigh in. You have the Nifty rejig also that will weigh in. What's your sense about the markets in particular?
So I think it's adjustment of all of these factors. The tariff data point, which is also something which the markets would probably want to go in a little bit more light, juggling of positions due to the expiry. And then we look at this as a sector churn also, possibility of a sector churn, because in this last 1,500-1,800 points move for the indices, there have been few sectors which have performed exceptionally well, and they're getting into somewhat of a overbought territory on the charts. So I think it could probably be a bit of a profit booking into these spaces. and then other underperforming names, they could probably make a comeback for themselves. So I think it's a bit of a churn. This consolidation generally stays for at least a 3-4 day period. So expecting the markets to just about drift into this kind of a trading band. What we could be also doing is establishing a trading range in this last 2-3 days of up move and then consolidation. So on the upper hand, we are looking at 23,800 to 24,000 mark as a resistance, and on the downside, I still believe that 23,400 is something which the markets could probably protect towards. So any dip towards 23,400 mark from current levels should be taken as buying opportunity.
Okay, any dip to that 23,400 level should be treated as a buying opportunity. Dipan, while the FIIs have definitely turned corner, there is that looming April 2nd deadline of the tariff implementation, right? Of course, there's a lot of back and forth there as well. Overnight, Trump saying that the tariffs, if implemented, would be retrospective in nature. But tell me, do you think a large part of the tariff fear is out, at least for us?
That's a difficult one to answer, and perhaps you should ask President Trump when he comes on your channel. But how can I say whether the fear is over or not? Tomorrow some statement comes, some additional tariff comes, could be on pharmaceuticals, could be on gems and jewelry. I mean, anything could happen, one can't say. But I think this is the new normal, and investors are getting used to it. And if you see the kind of stocks and industries which are doing well, those are all the India growth, the India focused sectors are doing well. Although I think tech has done well last few trading sessions, but that is just kind of a catch up. But by and large, what's doing well is cement, banks, NBFCs, consumer durables, engineering products, to an extent, real estate, retail like Trent. So investors are now realizing that it's better to look for companies which are domestic oriented, which don't have too much exposure to the US market. So if Trump tariff were to be implemented, those stocks, the fundamentals won't get impacted. So I think the kind of markets and investors tend to move on, and enough of these Trump tariffs and the fear around that. Companies impacted by Trump tariff, keep them aside. But rest of the market is looking good, so let's focus over there. I think that's the approach.
Well, Dipan, from your lips to God's ears, I hope Trump makes it to ET now. But on that note, let's move on and let's talk about, the ongoing trade negotiations with the US. India is likely to further lower duties on American bourbon whiskey, is what we understand. In fact, we're learning that India may actually relax its stance by reducing import duties to 50%, down from the current 10%. Sameer Dixit, my colleague, is here with exclusive details on what he's picking up.
Well, amid the ongoing trade negotiations with the US, Indian government is likely to provide more relaxations by lowering the duties imposed on the import of American whiskey, or specifically the bourbon whiskey. The Indian Commerce Department is actively considering to lower the duty to further 50%, to impose a duty of just 50% on the import of American whiskey or the bourbon whiskey. Currently, if you see, the Indian government recently, almost a month back, reduced the duties from earlier 150% to 200%, which included a 50% basic custom duty and an additional 50% agriculture cess. But now government is likely to take this relaxation to the extent of 50%. A further reduction to the tune of 50% is what the Indian Commerce Department is actively looking at. However, the Commerce Department is not favoring to reduce the duty to 0% or bringing it down to nil, because they are looking to safeguard the domestic players as well. So that's what the Indian Commerce Department is currently looking at, to provide relaxation on the import of American whiskey by lowering the duties or the import tax, but not to the tune of 0%. And if you see the larger picture for the financial year 23-24, the import of American bourbon whiskey or the American whiskey was somewhere to the tune of $1 million, and government understands that this will grow manifold when the duty is reduced, and this will help to further strengthen the trade negotiations with American counterparts.
All right, thank you so much for that, Sameer, for giving us those details on bourbon whiskey, that there is a thought going around that to further reduce the duty on American bourbon whiskey. Remember, this is all a part and course of that tariff tirade of Trump as well. But Kunal, on the charts, which Alco-Bev stock looks attractive to you, and do they look attractive to you?
Yeah, I think few of them are attractive. United Spirits, for example, that's something which has been doing very well for itself. especially from the point when the stock I think was almost at 750, 800 2-3 years back, towards the point when the stock moved towards 1400, 1500 plus mark, then consolidated. So it's still looking fairly attractive. You have Soam Distilleries, that's also another name on the mid cap side which has been looking fairly attractive. It's come back towards a previous multi-month high or multi-quarter high, about that 125 to 130 range. Radico is something which I think has been doing exceptionally well, from being almost 10x in the last 5-6 years, 2018-19 onwards, towards a point when the stock has gone through a recent correction. So I think these are the few odd names which still looks attractive.
Right, okay. Dipan, great to have you on the show. Thanks as always for your time. We'll let you go on that note, but just stepping into the last half an hour of trade. So let's get in some closing ideas as well going. Naresh, what's on your list?
So that would be a buy on Bajaj Finserv. That's a stock which has broken out on the short-term charts as well as closer to a 3-year high. Expecting this to take leadership in the financial space. Stop loss would be at 1930, expecting a move towards 2100.
Bajaj Finserv coming in for Naresh. Kunal, what about you?
I'll go with the buy on Shree Cement. That's a chart which is looking extremely strong, and I think one of the few large cap cement names which has actually come back towards a lifetime high. So it looks attractive at current levels.
All right, so that's Shree Cement coming in for Kunal and Bajaj Finserv coming in for Naresh. Those are the closing trade picks coming in from our experts.